Joining us now with more on the markets, Joe Amato, Neuberger Berman Group President and Chief Investment Officer. The firm has $500 billion in assets under management, but they're trying. You're working hard. You want to the trillions in sight,
trying,
right?
Trying to do right by clients.
Maybe you do it in capital appreciation this year if they listen to you. You know,
this is a tricky time in markets, right?
We've had a kind of a crazy bounce back.
Yeah.
That no one maybe was expecting. I don't know if it was right to sell at the bottom. Obviously not. But now I don't know if it's right to buy after we've come back this far.
Yeah. We actually upgraded our view on global equities right after the sell down. So after that April 2nd.
You did like April 3rd or 4th or something?
That Monday. That Monday. So we got fortunate on the timing for sure. But we've seen a bounce back in markets.
Was that your idea, Joe?
That was our collective best thinking.
Were you pushing back on it and saying you're a fool?
I was.
You're not going to.
We're all holding hands on that.
I don't want to know. It was a consensus. All right.
But you've seen some good news on tariffs. So after the initial shock, if you will, you've seen incremental good news. You've seen some hard data that has held in there. The economy has proven to be resilient. Mm-hmm. So markets have reacted to that. I think it's a tricky time, though, because you've still got lots of things on the come. There's a lot of things going to be coming together over the next couple of months, right? There's this UK announcement is the tip of the iceberg, if you will, because I think you've got to see a lot more than just to deal with the UK.
I mean, you have seen the administration not necessarily respond to the market sell-off, but there's been times where the market was craving some good news, and we got the pause. Market's craving a trade deal, and we're going to have one maybe announced today. If the market does too well, does that cause the administration to take a tougher stance? And because they say, look, we're back to where we were, we don't need to worry?
I think the bond market is the key, right? I think what drove, in my view at least, the pause on that, was it April 9th, was you started to see real volatility in the bond market. And I think this Treasury Secretary understands, and I think the President understands, you lose the bond market, your whole agenda goes in the wastebasket because you've got deficits to finance, you've got a tax cut, you've got a lot of things that depend on rates staying anchored, particularly on the long end. So we're watching that very closely. Certainly, the better equity markets do, you'll have a sense that maybe we have more leverage. The worse markets do. I think the administration, frankly, from a negotiating standpoint, probably does have less leverage. And as much as it may say we don't look at markets, it's hard not to look at markets and what the aggregate of us are expecting for economic activity.
The UK, it's been pointed out by many people, is not a big problem for the U.S. And I don't know, what do we import? Bangers and mash or something? Or shepherd pie?
Well, they're not
arm
even
holdings. There are a few, but it's not. Look, but if we get a series of deals like this, with China still intransigent, let's say, is China the big one that we need?
I think a lot of this is about China. And UK is not even in the top 10 of our trading partners when you look at aggregate exports and imports. Nonetheless, it's important, and it's a piece of good news. But Mexico, Canada, China, Europe, Korea, South Korea, and Japan are the major trading partners that, we would expect to see some developments with respect to the deeper allies, if you will, of the U.S. as it relates to either China. I think that's really a separate issue. Yep. I think that's going to be a much more complex negotiation. There are talks going on this weekend. We'll see. Our expectation there is you'll see a ratcheting down of what spiraled, but you're still going to have significant tariffs on China.
What's more worrisome today, that inflation is still a problem, or that the tariffs have caused a lot of uncertainty and we're going to get a slowdown?
Much more worried about the uncertainty caused. You're seeing it with companies while they're reporting reasonably earnings.
The Fed should have cut yesterday.
I think the Fed is in a tough spot, right? You've got forces that are going to be pushing up prices in the context of tariffs. You haven't seen the weakness yet in the hard data. No. A lot of the soft data has gotten weaker.
So we'll see it in the hard data?
I think you'll eventually see it in the hard data if you don't have much change. I think as you get into
next month,
as you get into the second quarter and the third quarter, a lot of the delayed capital allocation decisions that we're seeing out of companies right now are going to start to take effect.
So it's coming.
I think it's inevitably
coming.
And that's why our expectation is you are going to see some cuts from the Fed, but later this year, maybe starting this summer.
All right. But you haven't reversed your decision that all the other people made that to go. No, you were
with respect to equities. Yeah, Look, I think you're going to be in the trading range until you see a greater clarity of what the pathway is.
I think we're at the higher end of
the trading range.
Yeah.